Good morning this Wednesday, the 13th of December. I'm Grady Wolf, market analyst with Bell Direct. Wall Street's rally extended into Tuesday's session with the key indices rising sharply in afternoon trade as the S&P 500 added 0.46% at the closing bell. The Dow Jones rose 0.48% and the tech-heavy Nasdaq had the biggest rise of 0.7%. The latest consumer price index data drove the rally yesterday, with the readings showing inflation in the US rose 3.1% in November year-on-year and 0.1% month-on-month, which was in line with economists' expectations and continuing the deflationary trend, which provides support for the Fed to look toward cutting interest rates in the future as the inflation rate is falling toward the target 2%. The all-important Fed interest rate policy meeting kicks off today ahead of the interest rate decision out tomorrow, with the expectation that the Fed will maintain the current cash rate following the release of recent favourable economic data. Over in Europe, it was a lacklustre session across markets, with majority closing lower on Tuesday as investors responded to the latest CPI reading out of the US and other economic data released in the European region. The Stock 600 fell 0.23%, weighed down by the oil and gas sector sliding 1.28%, while Germany's DAX closed the day just 0.02% lower. The French CAC fell 0.11%, and in the UK, the FTSE 100 ended the day down just 0.03%. UK unemployment data out for October yesterday came in at 4.2%, which was a flat reading on September and below economists' expectations, in a sign the labour market is remaining tight in the UK. The ASX extended its December rally into Tuesday's session, with the ASX 200 ending the day up 0.5% as every sector ended the day in the green, led by the technology sector after the Nasdaq had a strong day on Wall Street on Monday. Materials stocks closed the day flat as iron ore price dipped on Tuesday. Australia's business and consumer confidence data released yesterday came in at mixed readings, with business confidence falling to -9 points, well below the expected minus 1 point, while consumer confidence rose 2.7% from a decline of 2.6% in November, in a sign consumers are optimistic about the recovering economic conditions. The story of the week so far has been the response to Sigma Healthcare accepting a transformative merger with Chemist Warehouse to bring the retail pharmacy to the ASX. Fund managers are bullish on the potential backdoor listing of Chemist Warehouse as the $8.8 billion deal is awaiting approval from the competition regulator. On the commodities front this morning, oil has taken a dive overnight, with the spot price now down 3.84% to $68.59 a barrel amid concerns of oversupply, despite OPEC Plus announcing further output cuts to stabilise the price of the commodity. Gold is trading 0.2% lower at $1,977 an ounce, and iron ore is flat at $137.5 a tonne. One Aussie dollar is buying 66 US cents, 95.41 Japanese yen, 52 British pence, and 1 New Zealand dollar and 7 cents. Ahead of the local trading session here in Australia, the SPI futures are expecting the local market to open the midweek session flat, despite Wall Street's rally overnight. And now let's dive into some trading ideas for your consideration today. Bell Potter has initiated coverage of Pilbara Minerals with a hold rating and a price target of $3.90. The hold rating follows recent weakness in the lithium market that has seen heavy shorting in the PLS stock. However, Bell Potter's analyst sees this as a short-sighted momentum and is confident that Pilbara's low-cost producing and strong balance sheet sets the company up to withstand weaker lithium prices and supports expansion programs. The analyst is also confident that EV-led demand will see strong medium to long-term demand in lithium market fundamentals. And Trading Central has identified a bullish signal on GUD holdings following the formation of a pattern over a period of 36 days, which is roughly the same amount of time the share price may rise from the close of $11.66 to the range of $12.60 to $12.90, according to standard principles of technical analysis. And that's all we have time for today. Have a wonderful Wednesday, and as always, happy investing.